And now joining us down the line is Director of International Monetary Research at the University of Birmingham, Ewen Stewart. Ewen, thanks for joining us this afternoon. Look, I just want to start with a question that I'm sure a lot of people at home are asking themselves this afternoon. That is, you know, it's 1.3% the economy grew overall last year. All right, it was 1.1 the year before, but so that I suppose is a slight improvement. But 1.3% just seems so measly. You know, is that the case in relative terms, or is it, you know, is it quite something?
Well, 1.3% is putting a very positive spin on it. That may have happened over the last 12 months, but actually as the population's been increasing a lot, partly as a result of migration, the per head growth is a lot less than that. It's derisory. But not only that, the chickens are coming home to roost because virtually all of that growth happened 12 months ago. The last 3 quarters have shown hardly any growth at all. If Rachel Reeves is cheering about 0.1%, God help us, frankly. It really is extremely poor. And interestingly, if we look what's actually happening in the United States of America, the American economy grew over 4% this year. I don't hear her having many nice words to say about what's going on in the States. So wealthy countries can perform well. This is a self-inflicted problem, in my view.
And Ewen, a lot of people think about the term economic growth and sort of question how it relates to them. But could you just paint a picture for us? I mean, say the UK continues to grow at 1%, maybe a little bit less, and the United States continues to grow at 4%. I mean, that growth does a thing called compounding. I mean, within a decade or two, that is a really significant wealth gap that grows and grows and grows over time. Can you sort of explain how that works?
Yeah, well, very easily. If we go back to when Tony Blair became Prime Minister in 1997, let's take it to the start of the millennium, just to keep the numbers simple. British families were about $5,000 a head poorer than the average American family. So pretty close. There wasn't much difference, actually. You could go to America, have a good time. It wasn't going to cost you much more. Today, that gap is about $25,000. That's happened in a short generation. And, you know, your viewers, if they go to the States, will probably have noticed just how expensive it is. And that is why. America has been generally growing at 2 or 3 or more % per annum, the same with Australia, the same with Canada. We have been growing hardly at all. And actually, the European Union's done even worse. So quite why Rachel Reeves wants to pitch her skirt to them, I'm not entirely sure. But just taking that point aside, growth really matters. It doesn't matter over a year. I get that. And I get there's a volatility about it. But there's a reason that Britain isn't growing and hasn't been growing for a long time. And it is a matter of policy choice. And I think the main reasons are that we have chosen to de-emphasize the private sector and invest very, very heavily in the public sector. Productivity in the public sector is generally extremely low. It's resulted in very high tax, very high public debt, and that has slowly but surely squeezed the life out of the economy.
OK, well, Ewen Stewart, the Director of International Monetary Research at the University of Buckingham, thanks indeed for explaining all of that for us. Really appreciate your time.
My pleasure. Thank you.